Tuesday, October 11th, 2016. Monaco 64, home of alternative economics and contrarian views. I like to talk about sterling or British pound. It's around 10:30 p.m. London time, so the markets are closed now. And the main reason I want to talk about it is that I think the pound is giving signs that the whole Western financial system could be in trouble. I know there's been a lot of talk over the last 9-12 months about financial meltdown, collapse, and I've talked about it. I've talked about the pound, how sometimes it can be, a harbinger of financial trouble. And yes, I live in the UK, so I am interested in how the currency does here, but I think it's also very important for all other viewers, be they Americans, Europeans, Australians, anyone that's, in the Western countries that have a dollar-based fiat money system. So and the other thing I like to talk about is the difference between the Keynesian school of economics and the Austrian school. Austrian school is based on common sense, in my opinion, on the natural law of things. The Keynesian school is based on the premise that governments and bureaucrats can regulate economic activity of hundreds of millions or billions of people. And basically, we've been under a Keynesian school of economics system for the last 50, 60 years, I'd say. So what's happened is that in 2008, the system collapsed, and the powers that be here in the UK, in the US, and Europe, they came out and bailed out the financial system. They bailed out themselves, the governments, because if the financial system went down, so would the government. So they threw everything at it. They printed money. They borrowed from future generations and present generations. And they succeeded in averting a total meltdown. And that's what we've had in the last 7 years, from like 2009 to presently. It's been the containment of the financial crisis. But nothing's been fixed. Nothing's been reformed. We still have the same financial system. And the reason why I've been negative about what they've done, and that I've been like, for some, a Cassandra, they would say, or negative, is that from studying the Austrian school, you learn that there's no such thing as a free lunch. Basically, the Austrian school looks at economics as it does you or me, as an individual. An individual, if he gets into debt, heavy debt, loses his job, what's he or she going to do? They're going to have to find another job, try to pay off their debts, work really hard, cut back on their spending. They're not going to be able to take on more debt to get out of debt. But the Keynesians, for some reason, they think that the government and central banks are different from individuals, that they can create moral hazard, that they can take on loads of debt to kick-start the economy or to get it into, escape velocity. But from learning about the Austrian school, you learn that there's no such thing as a free lunch either for governments. And I think that's what we're heading towards now. It's payback time. And I think the chart I'm going to show you is going to show you very clearly that that's the case. And it's not only the UK that's going to pay back. The United States is going to pay back. Europe is going to pay back. The whole world is going to pay back, unfortunately, because we've all been following this Keynesian-led Anglo-American financial system for the last 25, 30 years. So here's the chart of the pound, monthly chart going back 20 years. As you can see right away, if you know a little bit about technical analysis, we have a huge head and shoulder formation. Basically, in a head and shoulder formation, if you break the neckline, which is the line there between the two shoulders and the neck of the head, neckline, if you break that, the objective of the security or currency that you're looking at or commodity is from the distance from the neckline to the top of the head. And then you project that downwards, and that's where the market will go. So in the British pound, the neckline, it's at 140. In 2008, the pound got to around $2.10. So that's 70 cents. And now it looks like we've definitively broken through that neckline of 140. So you might find this a bit alarming, but the objective is 70 cents. So that means that the pound will buy 70 cents. I don't know when that's going to happen. It's very difficult to predict these things, you know, time-wise. But that would mean that $1 would be worth around £1.43. The pound has never been worth less than $1. The all-time low for the pound is $1.05 in 1985. So, and the chart doesn't lie. So you can see there, the head was the financial boom, you know, the Greenspan housing bubble that was also exported here to the UK. And then you had the collapse of '08, which is the right-hand side of the head. And then the powers that be, central banks and governments, they threw everything at the system to try to save it. They contained the crisis for 7 years, great financial crisis of '08. And if everything had been fixed, you'd expect the pound to be doing well now, but it hasn't. So it's payback time. The unfortunate thing is that back in '09, if the system had been allowed to liquidate, self-liquidate and clear, you know, if the malinvestments and the banks had been allowed to collapse, we probably would have gone down to one to one a few years ago, and the pound would probably be recovering by now. And the thing is that now we've had 7 years where the powers that be have thrown everything at the system. They've increased the size of debts and liabilities. They haven't reformed the banks. So I would expect the correction, you know, or the collapse to be even worse than it would have been back in '08, '09 if they had allowed it to take place. So I'm sorry I don't have great news, but I like to, look at things and scratch under the surface and see what is really happening. And as you can see, the chart doesn't lie. So, you know, we can talk about Brexit, we can talk about labor, conservatives, we can talk about, you know, Russia, you know, war. But in the end of the day, it's all about the currency. And it looks like the markets have lost faith and confidence in the monetary viability of the British pound. and the British financial system. And I'm afraid that's going to spill over into the United States. The dollar might still do well in the near future, mainly because the peripheral currencies like the pound are going to, look hard, are going to be, dump. And it's going to make the dollar look relatively strong, but don't be fooled by that. The same thing's going to happen to the dollar, and it's going to happen against gold because the dollar is the reserve currency. So if you enjoy my videos, please like, share, and subscribe. And if you'd like to donate to my channel, there's some links below in the description. Take care. Bye.